What's going on? NeoFX Black Flag Trading, guys. It's August 25th, 2018. It's about 6 o'clock in the afternoon. It's a Saturday, 6 o'clock Central Time here in Texas. So I wanted to go over SBUX and mainly based on a prediction that I made last year, and we'll get to that in a second. But SBUX is at an interesting point, and it's offering some very good opportunities. Now, I've been right in this stock for the last 8 to 9 months, up and down, okay, off and on. Made some pretty decent monies on a few option trades on this, but I want to explain to you why last year, there's a pic that I sent out last year to my members, and I put it also on Facebook. Okay, this is where SBUX was at the time. This was September 5th, 2017. I wanted to go over this specifically for one reason. Okay, is the simple concept that is fleeing a lot of people for some reason. A lot of traders still cannot get this, and this is what I'm talking about. The larger time frames, okay, the larger time frames, by that I mean monthlies and weeklies, okay, they are going to dictate what the smaller time frames do. Okay, they are going to dictate short-term moves in prices, not the other way around. Okay, only because we have a downtrend here on the 4 hours, let's call it, or 1 hour chart, and on and on, doesn't mean that the overall trend is down. Because in a bigger context, if you look from the 1990s bubble, I'm sorry, the 1990s, yeah, peak, essentially bubble and crash, this is a simple pullback. Okay, this would have been a buying opportunity back in 2000, whenever this was, 2008. But let's go to something a little more recent, obviously. So this is where SBUX was at the time when I sent this pic out. And what did I say? So I said, you know, we're breaking this trend line barely. It hadn't quite broken it at a time, not fully like I like it to, but it was giving me signs that it was going to do so. And this is what I anticipated. I said we might have a little break, a pullback to the back side of this broken trend line, okay, this turquoise trend line that I had here, and then we should go down. Okay, and I even put here head and shoulders forming, you know, question mark. In other words, I was way ahead of myself, so to speak. But this is what trading is about, and that's why I wanted to make this video. I've talked about this in the past. You have to figure out the next piece of the puzzle. Okay, trading is not a science. I've talked about this many times. If it was, I'd be a trillionaire by now. I promise you. It's not a science. It doesn't work every single time. But it is an art. Okay? It is an art. Yes, you have to have your tools and your brushes and your paints and your boards and whatever. It doesn't matter. You have to have those fundamentals to be a painter, let's say, or a sculptor or a musician. But for the most part, you have to envision. You have to envision what the next piece of the puzzle will be. I mean, it's very, very important to understand this concept. Okay, we're not talking about guessing. You are to some extent guessing, but it's an educated guess based on your experience with technical analysis and price action and just the way these charts work. Okay, so all of those things put together should give you an idea, like it did here with me last year. I could have been wrong, obviously, but we'll see what happens in a second. But it should give you an idea, guys. When you look at a chart, it should give you an idea of what's about to happen next. Okay, assuming you've been looking at these for relatively, you know, medium to long time frame, okay, amount of time. Because if you're a newbie, obviously you have no clue, and that's fine. But if you've been, you know, trading passively, let's call it, or even actively for the last 2 to 5 years, okay, and you're still not figuring out what the price action looks like, then there's either lack of focus or this is just not a passion for you guys. Okay, you're losing interest. It's something, and because it's beyond, you know, intelligence and IQ. After you've done something for 5 years, there's no reason, smart or not, that after 5 years of looking at this shit, you shouldn't have a clue of what's about to happen for the most part, okay, in prices. So let's go back to a live chart. So this is where I was, and what did I do last year? So I drew the trend line, and as you can see, this is where the prices were here. It had just slightly broken this upward trend line, okay? Well, let's see what happened, okay? Let's go to, you know, let's fast forward and see what happened, okay? So, in other words, I had predicted that after this little break right here, we would have had a pullback up to, I don't know, 60, 65, because typically head and shoulders are symmetrical, and I was expecting an head and shoulders here, and that's exactly what we got, okay? Left shoulder, head, right shoulder. But most importantly, forget the symmetry, because sometimes they're not symmetrical, but most importantly, I knew that prices will most likely come back first, okay? They will come back to the back side of that broken trend line, which at the time it wasn't quite fully broken yet, but again, it's about seeing the next piece of the puzzle, right? And then I said we would have been short from there to about 26, 34, and then 26. Why do I have this? What did I have this image in mind? Okay, so let's go live. And the answer is very, very simple. Very, very simple. Let me go to a monthly, and I'll tell you exactly why I thought what I thought at the time, and why it turned out to be pretty damn right. I mean, we're not at 26 yet, you know, but we did have this A, B, C. Excuse me. You know what? Let me put in the. Let me go to a lighter chart. Sorry. I hope it's not too bright, but I like it better than the dark one, to be honest with you. Okay, so why did I have this vision in mind? Well, it's because I've learned to do the same thing time and time again, because it works, okay? The idea is very simple. If you've been following me for a while, you know this. Once a trend line breaks, okay, in this term, in this case, this is a, let's call it a midterm trend line, because the overall, the longer term, to be honest with you, which doesn't really help us any, technically it's this one, okay? It's hard to see, but it's still an upward trend line. That's the long term, that's the shorter term, okay? So what happens? Well, when we have a break, of a huge trend line like this on a weekly chart, okay? There's a 2009 bottom, guys, after the financial crisis, okay? Starbucks went from $4, it peaked at $65. Not bad, okay? 13 times your money, not bad. But I think it's time for a pullback, okay? And that's why I put this last year, and sure enough, we got it. Here, it broke it, it came back, and it fell after that, okay? So now let's go beyond the vision, and let's get into the technicals and see what's going on. Well, so head and shoulders, you guys know they're reversal patterns. I mean, I hope you know that by now, but why did I think that we were topping here? Well, first of all, by looking at this at the time, I've seen this before, okay? This type of price action, okay, this typically, after a rally like this, is a top. But what it does, the way it pulls back very sharply, and then you have a sudden break, okay? Sudden break of this last high, but it's very subtle, okay? Very subtle. And then a huge pullback again, it's typically about to form your left shoulder here, okay? Had this kept going up and up and up, this value will be null. Okay, it will be void. It wouldn't make sense. But the way this zigzag back up after the pullback and then quickly crashed again towards this neckline, it kind of told me that we're about to form our right shoulder to then come down. Well, that's exactly what happened. Okay, and then what do? Well, you know, my strategy is very simple, or one of my strategies. The trend line breaks, guys, let it come back to the back side of it, which is also a Fibonacci level, and then you start your ABCD counts. In this case, A, B, draw your fibs. It came to a 618, almost to a 786. So because it came so far up, typically at the 127 will be our short-term target, okay, for this setup. And sure enough, it came from 61.90, 62, let's call it, to 48. That's not bad. 14 bucks. That's about 25% on a $62 stock. 25%, but guys, an option play on these. If you had timed this right, I mean, this could be 10, 20x easier money. Okay, you got to time it right there in options. I don't cover options in my service because they're complicated, and I just can't trust people to execute them the way they're supposed to. So I've done away with options. Okay, but you can still short this with a margin account. You can short this without buying options. Okay. You don't have to buy puts or sell calls here. You can short this stock, you know, on E-Trade or wherever you trade. If you have a day trading account, which is a margin account, you can go short the stock without going into options, okay? And you still would have made a shitload of money just down to this level. But let's look at the overall longer term trend. Why did I think here that we're eventually going to 26? Okay. It's very simple. In my opinion, what we have formed in SBUX since its inception, it's a very beautiful A, B, C. Now, granted, the D would have been the 1618, but again, guys, when there's massive volume and some technology or concept like SBUX did in this case takes over. I mean, fuck. I don't care where you live in America. If you don't know, if you haven't seen at least 20 SBUX by now, even if you're just 10 years old, somewhere around your town or cities, I mean, you know, you're blind. Okay, they're everywhere. They've taken over. Okay, the coffee business, the coffee shop business. I love it myself. I use them a lot as a place of work. I go to study there. I go to trade. I do a lot of stuff at SBUX. It's really become a place of business. But they're everywhere. So that's what happens. So these levels aren't always going to be respected. I mean, the A, B, C, D would have been here, but it's just zoomed right through that 618. So we're here now. That's fine. Doesn't matter. Well, I believe the first A, B, C, even though very extended, D got completed. So because we have the first ABCD completion, now we take it from this last 2009 low point A, B, and now we're waiting for that C. Okay? So last swing low to high, we have our AB. The trend line broke on the weekly, which is your biggest indication that we're about to turn around. Now, I'm not calling a major crash, but we are due for a pullback in SBUX specifically. I think in the market in general, but we're talking about SBUX now, so let's stick to SBUX. So this is what happens, guys. Typically, prices will come back to previous major, you know, support and resistance levels. In this case, we had the peak, let me see, of 2006, around 20 bucks. So it would make sense for prices to come down to that, but we're not going that long term, and most importantly, we're not gonna go for that dramatic of a move down, because it's been on a massive rally. So let's be a little more conservative. The 38% pullback is the first logical target after a break of a trend. So we have a clear uptrend. We've had it for the last 10 years, right? Well, we just broke that key trend line on the weekly, okay, with also a beautiful head and shoulders on the weekly. I mean, guys, all the signs are here. I mean, I don't know how much more do you want. We're going down, and we're going down at least to the 41. Then the 50% will be our second target, and eventually 618. And I think ultimately, which is at 26, 27, right? That's why here I said, okay, first target most likely 34, but eventually 27, 26. But here, if you see, the 38 is also the 41. Okay, the 38% pullback. Okay, because what the Fibonacci's are, guys, just keep it simple. The Fibonacci's are a magical tool, but all they do is they show this 38, 50, 618, 786. All they do is show previous support and resistance levels. Okay, for instance, the 38%, which I think is going to be next at 41. Well, look, we had a beautiful resistance here. So previous resistance will become future support most likely. Okay, the 50% after that, look, it was a beautiful support level, and it's bound to repeat that. Okay, and then 618 and on and on and on. The 76 will technically be I mean, it's you know, it would be quite dramatic if it does, but it's possible. It's possible to then form the next A, B, C, D. So if we do get a market crash that takes Starbucks to that 40, 35, 26, and possibly, it's possible, I mean, it's possible, $18 eventually. Well, guys, that's going to be such an unbelievable buy long term again, because markets always recover. I think we're due for a massive crash, but if it does, I think it'll happen. It'll be very quick. And then, I mean, imagine buying Starbucks for the next 10 years like it did here, from $20 to 100. Now, it doesn't sound much. It's only 5 times your money. But guys, I mean, if you have a margin account, you know, you have 4 to 5 times leverage here. So if you put you know, $10,000 into Starbucks, if you put $10,000 into Starbucks at $20, okay, let's say we get here under a massive crash, okay, a little panic, let's call it, they're gonna probably take it down to at least a 618, which is the 26, which is why I called that. But they'll probably take it down further than that because they want to buy it later much cheaper. That's the strategy. They've always done that. Okay, so let me give you a little math. If you put $10,000 of your portfolio into Starbucks at $20, okay, assuming we have this crash, okay, to the 786, so you get 500 shares, right? Well, here, 10,000 divided by 20, 500. But technically, if you have a margin account, and Starbucks has a 25% margin requirement, okay, because it's such a massive stock, you can control with the same $10,000 4 times that amount of shares, okay, at 4-to-1 leverage. So $10,000, even though it only buys you 500 physical shares at $20, you really owned 2,000. Okay, those 2,000, if we go to 102, which would be the next rally, the next logical target after this pullback, okay, well, that's $200,000 on 10,000, okay, on a margin account. Okay, in other words, that's 20 times your money, versus if you had just bought physical shares, okay, 10,000 divided by 20 is 500 shares. If it goes to 102, I mean, still not bad, 5 times your money from here to here. But, you know, you got to take advantage of these scenarios and of the infrastructure out there with trading, because some of these brokers will give you 5 to 6, sometimes more leverage on equities. I use 4 to 1. That's as high as I go personally on stocks. It's 50 to 1 on Forex. But I just wanted to let you know that trading is not just about, scalping and 4 hours and dailies and weeklies. Guys, whatever you take out, whatever savings you have that you want to invest long term, this is the type of setups that you need to look for, okay? Because the markets will always recover. Look at Microsoft. Beautiful example. Microsoft, massive tech bubble in the 90s, crashed. All it did was B. It crashed to a beautiful look. The upward trend line never got broken. Never got broken, because it's not supposed to. If we're bound to go up long term, this upward trend, long-term trend line should not be broken. If this was broken in 2009, then it would have been big trouble. Okay, but it held. So that was our A, B, very extended C, but a C nonetheless. And look, all is done the last 10 years, guys. All is done. Here, it blew through the 1618. Okay, but this would have been the target. In other words, from $15 to 97. So let's backtrack to 2009 when Obama took office. Okay, after the financial crisis. If you would have bought, if you would have known these things, and just put $10,000 into Microsoft, I mean, it's a pretty safe name. If you had to pick any, this would have been one of them. $10,000 into Microsoft on a margin account. Okay. $10,000. It was $15 at the time, so it would have been 666 shares. However, at 4 to 1 leverage, it would have controlled 2,600. Well, we just passed $100. $266,000 on 10,000. In other words, a very beautiful 26x your money. I mean, just as easy as it gets. You would have literally just bought here at the bottom, had you known these things, and just rode this massive bull run we've had in stocks, which is pretty unbelievable. I mean, to be honest with you, I'm impressed as to how far we've gone in the stock market. I mean, it's done. That was the 2009 crash, guys. I mean, we're flirting with those tops. I mean, it's due for a pullback, but it's been an unbelievable rally, guys. Look at that, 6,500 low in 2009, 26. That's 400% in the Dow. Just in the Dow, had you put your money in the Dow Jones, in the index itself, you would have been 4 times up. I mean, but individual stocks, as you saw, you would you're looking at exponentially higher, 26 times. I mean, look at Visa. Look what Visa did from 2009. Look at that. Okay, look at these are some of the stocks that I bought over the years. Okay, right in this 10-year bull rally. Okay, look at this shit. Adobe. Okay, seems like a crazy crash again. That was 2001. Okay, that was the tech bubble. Then the 2009 bubble. Okay, however, that long-term trend line never got broken. Okay, it always held, and then it just fucking went parabolic. Doesn't matter. Okay, it'll do this sometimes, but I mean, look at Amazon. I mean, Jesus, look at Amazon. Okay, 2009 crash, if you can call it a crash, then $1,900. Okay, so the point is simple. We are currently in a pullback phase, in my opinion, and I think it's a perfect opportunity if you wanted to short it right now. Actually, at 52, 53, we're going down to first 41 and zigzagging our way up and down towards 34. But most likely, if we have a little panic in equities in the next few months, okay, Trump may help with that, with all this bullshit he's doing, but we may very well see a pullback eventually to 26, which will be a great buy long term. Just like I told you, if it gets on a panic On a flash crash, if it gets to 786, which is around $18 to $20, guys, just remember what I'm telling you right now. Buy StarBucks heavy if you get below $27, between 27 and 20. Okay, this range right here, long term, this is a great place to put your money in. Okay, great place. Same thing for Microsoft. I think we're bound. The first ABCD got completed. Okay, I think we're bound for a pullback. I mean, wow, can't believe how much higher it went than the 618. The 618 was here at 96 is where my top was. It went to 111, man. I mean, that's crazy. That's crazy. But either way, my point is, whenever this pullback comes, just keep in mind the one A, B, C, D, and we're talking 40-year chart here almost, but A, B, C, D got completed, so the next A, B, from whenever that top is, I don't know, but look for a pullback, most likely to this level, okay? Because again, they're going to take it down pretty aggressively so they can then ride it back up for the next 10 years again, just like they did here. So this would be a perfect point because it's previous resistance and it's also the 7-8% pullback of this new ABCD leg, okay? So Microsoft, if we do get that flash crash, guys, in the next 6 months to a year, I don't know, there's a possibility that Microsoft can come down to the mid-30s. I mean, it sounds crazy, but it could. And if you bought there, well, the next target, long term, okay, we're talking for another, once it hits the bottom, 10 years after that. So we're talking, I don't know, 11, 12 years from now, assuming we'll have a crash in the next year and a half. But the next target would be 170. So it's 6 times from this level, but times 4, it's another 24 times your money. This is a way you should look at. I use stocks as a bank. I keep very little money in my bank. Okay, long term, I'm always investing in something, because this is what you would have done. I mean, the charts don't lie. The last 10 years, had you kept money under the pillow, guys, you would have fucking. I mean, you made a big mistake. Let's just say that you made a huge mistake, because I know 10-year time frame sounds crazy. Okay, but guys, time goes by fast. I mean, a lot of you remember when Obama got elected. That was 12 years ago. I mean, well, not 11 years ago when he was running. Trump has been president for 2 years almost. I mean, it seems like yesterday to me. Time goes by. Time goes by. So why not put the money to work? Okay? And that's how you do it. This is exactly how you trade long-term equities. Okay? So again, StarBucks, I think we are going down short-term to at least $42. Okay? Then we'll have to see what happens after that. But we have a very clear ABCD that got completed. Okay? Sorry. There it is. So the first ABCD, okay, on the daily, we hit that textbook A, B, C, D. Now I think we're in the process of the next A, B. We're either here at 54, but possibly we could come up to the 55, 56 level. Doesn't matter. It's still a good level to short around these 2 targets. And I think we're going to that. There you go. Here's the 42 target. Which would be essentially the D of this new A, B, C, D. Okay? So, and also because look, we have our 5th count. 1, 2, 3. So we're in our 4 Elliott wave impulse count right now, to eventually take us to that D. I'm sorry, to the 5. Okay? And the 5 corresponds exactly with the 38% Fibonacci pullback of this last 10-year A, B, C swing. Okay? We're going to hit at least the 38%. It's possible it could fly up after that, but we have to at least first hit that. Okay, so right now we're bearish on Starbucks going forward until it hits at least 42. At that point, we'll see what happens. Okay, all right, guys, I hope this helped. I just wanted to show you that the larger time setups, the larger time frames, guys, are going to dictate what the smaller setups do. Okay, it's always been so, it'll always be so in technical analysis. It doesn't work the other way around. Okay, this short-term stuff is noise. Okay, they can be traded, but it's noise. What you want to go off of is daily, and especially weeklies. Okay, when you first open up a chart, the first thing you should do is open up your weekly and see what's going on. Okay, so in this case, to recap, this is what I did last year when I drew this, which turned out pretty damn accurate. Okay, we had our trend line. Okay, I saw some hints of it possibly being broken. I mean, technically you should wait, but once we got back to the backside of that broken trend line and formed this beautiful head and shoulders, yeah, guys, I mean, we should be looking south. Momentarily, we should be looking south. Then for your target, you draw your Fibonacci's. A, B, you got the 38, 50, 618. Align those with this down ABCDs to get a point of confluence, and that's how you come up with your targets. Okay, so we're going to at least that 26, at least. I'm sorry, that 42, which is a 38% level. Also, because if you look at here, great support resistance point, so it's bound to attract prices to at least a level. After that, we'll see. But Starbucks, again, as of August 25th, 2018, guys, I say we are going to be trickling down slowly to $42, which would be $10 from now. That's not 20% on an option play. This is easy, 5 to 10 times your money. But again, I'm not going to get into those complicated setups on options. But I'm just saying this could be shorted right now at 52 to 55 area, down to 42, pretty safely, in my opinion. Okay. So we're bearish on Starbucks. We'll see what happens. Thank you.